we blinked. We literally blinked. I was here 24 hours ago, and the market was, one thing, and now it's completely different stuff. Really interesting to see how, the world is developing in literally 24 hours, because that's exactly what, when I say the market is not the same as of 2 years ago. People were like, man, it's the same market. No, it's not, because that market reacted to data. This market doesn't react much to data. It reacts to politics, react to geopolitical, more geopolitical, around sort of stuff. So it's completely different. And I think that when we got some sort of that type of mispricing, it's really hard for those who are trading technical analysis, because, to be honest, you're not gonna, so sorry to tell you, you're not going to be able to draw support lines and resistance lines when there is a war going on, when there is a conflict going on, when there is tension going on, okay? Because tension is bigger than anything else. The market is tense, so it's like physics. When something is tense, it's very grouped, it's together. And then when a catalyst event happens, the tensity is sprayed, and it gets very crazy, and it literally goes everywhere. Okay, so that basically means buyers and sellers will be buying, selling, and going every place around. And we don't know what can possibly happen later. Besides having data, actual data that will be able to give us direction into a sense. Okay, so today we're going to be talking, it's Wednesday, we're going to be talking, of course, about Finlogix Sentiment Tool, that I know lots of people here love that, plus FOMC and Europe CPI. So we have FOMC, Federal Open Market Committee, delivering interest rates decisions. Widely expected already, 99% expected that it will be a pause. Okay, so no changes in the context. So what's more important about that is how Jerome Powell will come and give this out. Okay, how Jerome Powell will come and give this out. This is the thing that everyone wants to see about interest rates. The decision everyone knows, so we don't really care about it, and Europe CPI. As usual, we have Europe CPI coming over at 7 p.m. tonight in Australia. Just check your time zone to see what time is going to be at your place, but it's going to be around 7 p.m. into Australia. Okay, so basically we're going to be covering FOMC and Europe CPI expectations and how to trade it. Then we're going to be talking about Finlogix Sentiment Tool trading tool, like Aussie dollar against US dollar, US dollar against yen, pound against dollar, and etc. Okay, cool. That being said, I will have to put the risk disclaimer up for a minute or two, but before we go further, let me check if there is any new names here. Barry Bruce, I don't think there is any names. So you already know the drill. If you have any questions, you can just send it over into chat. More than welcome to, chat with me. Not a problem at all. Cool. Now, as usual, we will put the risk disclaimer up, and then after a minute or two, we can start. Okay, let's get started. Let me just take this off, come back to this one. So first thing is FOMC and Europe CPI. For that, we're going to be using the economic calendar as usual, and we're going to be using the Finlogix economic calendar. For you to comment the Finlogix is really, really simple. First thing is, open a new tab, type finlogix and then .com, enter, and that's where you're going to land. I can send the website to everyone into the chat, so it's already on the chat. You can have a look at it. You will come to tools and then economic calendar. Cool. At economic calendar, you can click at this week, come at this little globe, and then put into select all. As we're going to be looking at FOMC and Europe CPI, I'm just going to click select all as well to unselect, and then we'll go United States and Euro area. As we often want medium and high volatility, I'm just going to tick those two, medium and high volatility, and leave the low impact alone. And that's about it. This week, then we got Tuesday, Wednesday, Thursday, and so on. Of course, there is much more US data than anything else, but what we want is really that, let me just, it's supposed to be today, but it's not showing. Wait a minute. Today's Tuesday, Wednesday, sorry. It's not showing Euro area. Let me just take this one off. Present Lagarde. Okay, that's interesting. It's actually been as a low impact and it's not as a medium high impact. That's fine. That must be a bug, because it's not supposed to be a low impact. It's a high impact news data actually. But anyways, we can still do it on this way. There's no problem. It's just because I got a little bit tricked on that one. But let me just go into United States and then take the median off, and we have a little bit less on here. Okay, so to be easier, what I will do is I will square the CPI, so we can see here at 7 p.m. we're going to be having these releases, okay, for Europe. So we have Euro area core inflation, we have the CPI final May, not really what we're looking for. What we're really looking for is just these three here that I'm going to put into pink, so it's brighter for everyone to see. That's what we're looking for. We're looking for Euro area inflation rate month over month, final May. We're looking for Euro area inflation rate over year, final May, and we're looking for Euro area core inflation. Okay, so these are the ones we're looking for specifically. So we have a 2.3% expectation for the first one at Euro area for inflation year final May, from previously 2.7. Okay, so that's interesting. Expectations of 0.4 below what was before. So that's I take this as a very cool down sort of economy. And, not only this, but if we look to the ACB, that is European Central Bank, it's exactly what is happening. Okay, we're going to touch base that in a second. Just let me finish that. So Euro area inflation rate month over month final, it's expected to be a 0. So pretty much no inflations over the month of May. So last month. Remember, guys, the releases are always from last month. So if you are in January, the release will be from December. If you are in February, the release will be from January, and so on. Okay, it's never from this month because the month has to finish for us to get the release. And the last one is the year over year, so 1.9%. So year over year means from May last year to May this year. So it's 12 months. But it's not your typical January to December. It's basically from the last month to the last year's month. Okay. Hopefully everyone can understand that. So generally, when we look at these, we can see a very clear scenario. Okay, inflation is slowing down on all the measures, all the data points. Okay, so core inflation slowing down, month over month slowing down, and E over E is slowing down. And that's pretty good, okay, because this supports the thesis from ECB. That ECB has proponed before that inflation would be continuing to fall. So that being said, if we have any surprises to the upside, that can maybe make the euro stronger. And not because, not because ECB didn't expect that, but because they will have to, they're coming from a cut. So they haven't had any of the meetings that they hold in quite a while. So they had a majority of the meetings they've been cutting, okay? And therefore, if they've been cutting, that means if there is a tiny bit more inflation than expected, it's expected to have pretty much closer to zero inflation. If for some sense that inflation comes up to be like to 1%, that is higher than the previous, that was 0.6%, we're talking about a hawkish, bullish euro. Okay, ECB will have to maintain the rates higher for longer, and they will stop the pausing cycle, okay, the easing cycle. Now, that being said, what I'm expecting about the euro is there's either two scenarios here, okay? There's not three scenarios. There is literally just two scenarios. First scenario is that we have a actual cool down into the economy. Okay, so we have an actual cool down to the economy. And the second scenario is we have a miss into those numbers. And if we have a miss into those numbers, there's either two things that can happen. There is a less than the previous or higher than the previous. So if there is less than the previous, I still consider it as a downgrade on the inflation, but just a little bit tiny above the consensus. Or if it's higher than the previous, then we have a bullish euro. Okay. What are the currencies I'm looking to trade is if that becomes bearish, that becomes, below the expectations, very, very below the expectations, I'm looking to trade short on euro US dollar. Okay. US dollar has been acquiring some sort of strength in the last 24 hours. If we look at take this off. If we look at the US dollar index, let me drag it up. DXY, there you go. So if we look into the DXY, oopsie, I didn't want to exit the page, not too sure what's going on there. But anyways, so if we look to the DXY, we clearly seen that there is plenty of what's going on here. There's plenty, oh gosh, something happened. Wait a minute. Interesting. There we go. So we can see that there is a clearly sign of a bullish structure being formed into the US dollar index. Okay, so you can see it right here since Monday at 11 p.m. in Australia, midnight. Sorry, guys, midnight. We had a start of a bullishness into the US dollar. If you look at euro dollar, we can see already basically it's the same thing, but just the opposite way. But we can see that there is a pullback, or for those who are into the trend, a continuation for the bearishness of euro dollar. So if the if the CPI from Europe comes to be below the expectation, then I would be looking to short the euro on the weakness of the strengthness of the US dollar. Okay, so that is the first thing. The other one would be Euro CAD as well. Kind of liked Euro CAD. Euro CAD looks like to be forming somewhat of a consolidation on this area, mainly because of the oil. So Canadian dollar, for those who know, is very, is strength based into the oil. And if we look to the oil, we have WTY. What's going on? WTY. We have the pullback of that, oil prices. Still, it's not a major pullback. It's just this is a 1 hour chart, but you can see already some sort of pullback there. If we come back to EUR/CAD, if inflation comes to be below the expectation, then short in EUR/CAD is not a bad idea as well. Okay, so as I say, we may be looking to form some sort of consolidation at around this area. Okay. Yeah, around shorts around this area would be quite good. Anyways, we have been into a bigger consolidation actually. Let me just zoom out for everyone to see that. So if you look at here, we've been into that consolidation range, and now it's just a matter of continue to go down at 1.56, where's the sort of area. Okay, cool. Any questions on that, or can we move forward? No questions? Okay, that's good. We have quite a few people here today. That's good. Okay, so second topic is the FOMC. All right, so we do have questions. We move. Okay, switch. We move with the flow. Let me take this one off and let's just leave this guy. Thursday. Found it right here. That's what we want. Okay, so now we do have the FOMC at 4 a.m. in the morning, and then 4:30 a.m. in the morning we have the Fed press conference. That basically is Jerome Powell giving us a speech. Okay, for those who know, that's the most important part of the actual interest rates decision, because it's not only about the interest rates decision, it's basically about, because we already know what's going to happen to the interest rates already. And we can check that using CME Fed Watch 2, that I'm going to be going there in a second. But it's what Jerome Powell basically will say into 4:30 a.m., so 30 minutes afterwards. After that, there's a few other stuffs that I would like to pay attention in. The first one is the press conference questions. These are literally the best ways to monitor how bearish or bullish the central bank can be. Because think about, we can't ask Jerome Powell questions, right? You can't send to him an email and expect him to reply to you, or you can't just hook up to the Central Bank of America, the Fed, and be like, I want to talk to Jerome. I want to talk to JP. You can't do that. A little bit more complicated than that. So these are the best options, the best time for us to have our questions answered. I bet that majority of you here would have some question to Jerome Powell, and being able to have that live is already a perfect way to have information about what can possibly happen in the next steps for the Fed. Okay, so how do you get access to this? It's pretty simple. Soon that hits 4:30 a.m. in Australia or whatever, you can just change your time zone right here. Just depends on your time zone. If you don't know if your city is not here and you don't know your GMT, you can just search on Google like what. In this case, just using Brazil. So um, 4 p.m. Okay, so that's not okay. There you go. So it's GMT plus one. Okay. Um, so, anyways, you can just find that on Google, and you can look at here as well. Okay. Perfecto. Coming back. So, as I was saying, the FOMC press conference is one of the best ways for you to see what Fed is thinking, what Jerome Powell is thinking, what the board is thinking, because that's when the journalist comes and asks questions. So the first around, it just depends how big the statement can be, like between 10 to 15 minutes tends to be around that numbers. You can, basically Jerome Powell will read out the statement, the rate statement, and then after that it will be open for press conference questions. And those questions are usually questions that you may be thinking about. Oh, okay, what's the rate path forward? What are the expectations of the inflation? What is expectations of household expense, etc., etc., etc. Many questions. So then you have like 45 to 50 minutes of those press conference just asking questions. So take notes, because that's what the market wants to know. And yeah, that's pretty much about it. Okay, cool. So what am I expecting? Let me just drink some water, guys. Okay. Um, First, I forgot to, but let's go to CME. I'm going to send the link to everyone so you guys can have that. Perfect. So on the chat, you have the link for this tool. It's the CME group, and that's called the Fed Watch tool. So basically, what it does, it shows you the probability of the expectation of the market due to the FMC. Okay. As I say, because of these two, we have already really big understanding of what will happen. Okay. And I really don't know how to explain like how this actually gets done. But it's I'm gonna try to explain. It's basically true overnight swap rates. Okay, so the interest rates are a little bit more complex than actually just think about hiking or cutting and do it. No, it's a little bit more about, economy wise in a sense. So they have to analyze a vast variety of data. And the CME group does that and ask economists already into the market what they think it can possibly happen. Okay. So, anyways, so that is pretty much how that goes. And then you get 99.9% of the market expecting a pause again. Okay. And you can see that because the current target rate is 425 to 450 and he's 425 to 450. If you go 30th of July, continue to expect a pause, 85% of the market, and only 14% is expecting a cut to 25 base points. September, we have a 25 base points cut and a 55, let's say 55% chance of cut. October, we have a pause, and then in December, we have another cut of, there is a 40% chance. Now, these changes, this is a live, this is live. Um, this is not static. So basically what I mean by this is every data release, everything that happens into economy, it takes into consideration and it adjusts itself the expectation. So tomorrow we're going to have the press conference. Okay. this one can maybe change. Okay. This one can maybe change as well. This one can become a cut. This one can become a pause. Okay. So it's priced in 2 cuts for until end of the year from September and December, for September and December. So September 25, December 25. It's too early to say. Okay. We need to be looking at least 1 month before. So this is a tool, yes, but it's as any other tool, is just a tool. So don't use this as like a blind sort of, sort of thing. Anyways, so hopefully you guys got that. And I sent the link as well. So my expectations is pause and a hawkish fad. Okay. Hawkish fad, data dependent, because with the war, with the conflicts in Iran and Israel, and with United States, Trump trying to help Israel as well, they will need to understand the effects into the economy. Like, first thing is the tariffs that will be, starting to be felt now, plus the war, the conflict, as you wish to call. Okay, so it's just those things. So just be careful with that, and always pay attention into the press conference. Anybody have any question about that, or can we go to Finlogix? No questions? Okay. All right, we can move on then. So how do I trade that? Well, I would be looking preferably to trade like US dollar Japanese yen, US dollar CAD. I've posted a trade. So for those who don't know, I'm here every single day posting trade ideas. And I've posted a trade idea into US dollar CAD yesterday. Let it just load. So, I've a few things for the reason, but here it is: entry, side, take profit, stop loss. And you can see there is hit it, take profit. Okay, so that's a 2% right there. So that's pretty good. Another trade that I had was, I think, was long US dollar Japanese yen, but this one, oh, sorry. This one, I think it hit stop loss, but then afterwards it go into, oh yeah, it didn't hit stop loss, still running. Yeah, so this one's still going. Another probably 0.3% now. Yeah, so but pretty good as well. Like there is trades and trades that we should be paying attention into it. Okay. Yeah. So that's about it. Let's move on. Let me open Finlogix again and just close it. So for the market sentiment tool, you go into Finlogix, the link I sent into the description, not into the description, into the chat. You go into tools and then you come into sentiment, market sentiment. Okay, click on that. Just wait to load. Let me just drink some water. Okay. So I think, everyone has been here for the last couple of ones, so no need to explain much. And for those who are watching the replay on YouTube, Finlogix market sentiment tool is basically it's like a cheating sort of, you're cheating the game, when you're playing GTA or something like that. You have the cheating codes, it's using that. Okay, so I can see where the majority of the players into the market are positioned. So the retail traders, me, you, and everyone else. And basically do the opposite of what they're doing. Okay, statistically, we know that the retail traders don't have like a really good win ratio, so we just go and do the opposite of them, and eventually we will be on the right side of the market. Cool. That being said, um, yeah, so we only trade Forex, okay, but you can use commodities and indices as well without a problem. So let's have a look into how to use this tool. So we want to trade the minority. So we want to trade the minority part, so the small part of the sentiment, okay? Into this case, we have like EUR/CHF, and we have the signal strong buy, and there's only 6% into the long side and 94% into the short side. But there's a few things here. If it's below 10%, I tend to use the opposite, okay? Because if we go to EUR/CHF, for instance, go to the 1 hour chart. So if we go here, we can see that the market has raised a little bit already. And what I want to do is I want to actually short it. Okay. So I would be looking to short EUR/CHF and not to long EUR/CHF. All right. That being said, let's get to hands on. Let's get this one chart. Let's go EUR/CHF. And I would be looking to short this one. It's basically a mean reversion strategy, if you know what I mean, for now. Okay, we don't have a name of this strategy. So if anyone wants to come up with a name for this strategy, make yourself comfortable. Okay, so that would be the trade for EUR/CHF. Looking to go short. It's a good trade, actually. Stop losses above the highs. Break of these lows, coming back to retest, continuation. That's a good one. Next one is a strong buy into euro pound. Now, that is a 12%. 12% is literally, we don't know what can possibly happen. It can probably go above, or it can probably continue to go lower. We don't know. So what we do is we don't trade those ones. And then we wait for the next 15 minutes. So this tool updates every 50 minutes. And the next one will be in 4 minutes, because now it's 4:41, and the last update was 4:30. So we should be having quite soon at 4 minutes. And yeah, that's about it. Cool. So Euro Aussie, strong buy, 15%. That's good. We could wait as well. So Aussie CAD buy, 21% only. So Aussie CAD, let's go. Let's go Aussie CAD. Yeah, Aussie CAD long. That's interesting. We see that there is a sort of like a break on this area. There's only one thing here that I wouldn't like about mainly Aussie and CAD specifically. And the reason is because Australian dollar is a risk-off currency, and we are into risk-on, risk-off at the moment. And Canadian dollar is very, related to the oil. So if oil goes up, Canadian dollar strengthens. If risk-on comes in, Australian dollar sort of weakness. And if risk on is on the market, Australian dollar strength. So you are basically having to hold position for too long into Aussie CAD. It's not too good, okay? Because as I say, the market is not the same. So doing swing trades, let's say, into Aussie CAD is not the best, because what I find is having a simple way to trade that, like on a daily basis, it's better. Okay. So if you want to go long, you can, but just watch out for any headlines around the world or anything like that that can possibly, um, you know, something around Trump or something around Israel and Iran. Cool. Aussie CAD, Aussie dollar long. Aussie dollar long. I had a position this morning already with Aussie dollar short, I think, and I think I got hit stop losses. But yeah, I wouldn't trade as well Aussie dollar because it looks like it's on a very ranging condition at the moment. Not the typical market I would like to. Um, Not the typical market I would be liking to trade at the moment. Okay, so majority, yes. If you prefer to go long, would be ideally, because there is some sort of risk on at the market in the moment, but not preferably. GBP Japanese yen. See, it's updating 321. It just updated, but literally nothing changes. Okay, so now it's your take to go to those currencies, or to basically wait to turn around another 15 minutes, and then you see if there is any directions being taken. Okay, cool. Um, Euro dollar long, US dollar Japanese yen long would be preferable. Euro dollar long wouldn't be preferable, but US dollar Japanese yen would be preferable. So if we go US dollar Japanese yen, we can see there is a small pullback right here. Just go again, get this one. Look, that's not a bad idea. Okay, that's not a bad idea. We can see some rejections wicks on those ones. If we just try to long, with your stop loss down here, that's a good trade. Okay, that's a really great trade actually. So if you are looking to have this trade on the portfolio, that's quite a good trade. Okay, long US dollar Japanese yen. Next one, NZD US dollar. NZD USD short. Okay, that makes sense because we're long on US dollar Japanese yen, so we want to be long in US dollars. So basically shorting the New Zealand dollar. So NZD US dollar short. Wow, that's a nice pullback. Okay, that's a 50-minute chart though, but still, very consolidated as well. And we are literally at the bottom, sort of middle of the range. What shall we do here? Well, technically, I wouldn't do anything just because it's literally in the middle of the range. If it was to be on a short, I would highly prefer to be right here and then catch the wave down than be in the middle of it. Okay. So, yeah, no trades for me on New Zealand dollar, US dollar. Aussie yen, short as well. Let's have a look. Aussie yen. We are short on yen already, so it doesn't make much sense for us to short Aussie yen, actually. So no sense. Pound dollar shorts, that makes sense because we're long US dollar Japanese yen. So GBP US dollar shorts would make sense. Wow. Yeah, nice pullback there. I think that will sort of continue that down move. Will probably continue into the GBP USD. I would wait a little bit more. Okay, so if you are patient and you want to wait for a pullback around this area, that would be preferable. and then short the market on that area could be better. Okay. CAD Japanese yen sell doesn't make any sense for us because we already have the Japanese yen shorts. So longing Japanese yen and having Japanese yen doesn't make sense. US dollar CAD strong sell. I'm long on US dollar CAD. Again, doesn't make any sense for that. I'm long US dollar, sorry, so it doesn't make any sense. NZD Japanese yen strong sell. Again, it's below 10%, so that technically would be a long, and that aligns with all Japanese yen selling. So NZD Japanese yen long, that may be making sense. So yeah, small pullback. We can most likely catch the bid here. So if we have like a trade like here, yeah, that would be a good trade. Just a little bit small TP, like around 1 to 2. And that's it. Long NZD Japanese yen. Not too familiar, not wishing to trade NZD US dollar just because where it is sitting at the range. US dollar Japanese yen long and Euro CHF short. I'm looking to short Euro dollar, Sweet says. Unfortunately, we don't have Euro dollar here today. Oh, we do. It's a long Euro dollar. So, as I say, we are long US dollar here, so it doesn't make sense for us to long Euro dollar. And as well, GBP USD is short, so that doesn't make any sense. Okay, so I would be out of US dollar, but Euro dollar short makes much more sense than Euro dollar long at the moment. Okay, well, we come to an end to another webinar. I will be back tomorrow, same time, 4 to 5 p.m. We send a link into the Telegram, and I hope to see everyone here. All right, guys, thank you so much, and I see you tomorrow. Have a great day, or a great week, or a great afternoon, whatever time is at yours. But I see you guys tomorrow. Bye bye.